Welcome back to Everything Tesla Stock, everyone. The pandemic and the impacts of inflation have made the world economy unstable. This is not just an issue for developing nations. In recent months, the U.S. and other superpowers have also been negatively impacted by the hard economy. One must reduce expenses or find alternative ways to increase income, such as stock market investing, in order to mitigate the effects of these issues. On the other hand, not all stocks are long-term investments or wise purchases. Fortunately, growth stocks such as Tesla may be just what investors need to become extremely wealthy in the future. Why should you think about investing in Tesla stock? Let's investigate. Before we get started, please make sure you press the like button, subscribe to the channel, and enable notifications if you enjoy this kind of video so you can be informed about all that Tesla is up to current on. Tesla is a well-known electric vehicle manufacturer with a global market that spans several nations. The global switch to sustainable energy is something that the EV market hopes to ease, and it has worked incredibly hard to do so. Elon Musk, the CEO of Tesla, believes that utilizing technology to its fullest potential would improve humankind's future. Tesla has been at the forefront of cutting-edge technology since its founding, and it probably will be for as long as it can. Without a question, this is what sets it apart from other EV manufacturers. At a recent energy conference in Norway, Elon Musk said that Tesla plans to introduce self-driving capabilities to its vehicles later this year. The CEO of Tesla went on to say that the technology might be made available in the US and Europe, provided all the required permissions are received. Musk said that he thinks Tesla will someday add self-driving capabilities to ATVs, and that the company's capacity to do so would determine whether it is worth billions of dollars or not. What does Tesla and its stock therefore stand to gain from this new feature? To find out, keep watching. Its latest driver assist software version, which includes the self-driving feature, is more expensive than the previous one. Musk disclosed that the new function will cost approximately $15,000 in North America beginning on September 5. Compared to the previous edition, which cost $12,000, this is $3,000 more expensive. Users of Tesla may have to pay more for this, but it's a fantastic approach to maximize customer experience and bring in money for the corporation. Additionally, since a large number of Tesla owners have spoken favorably on this function, more customers are probably going to choose to use it. Tesla thinks that its cars will someday be able to drive themselves thanks to self-driving beta software. Musk also revealed plans to launch the second generation of Starlink internet satellites, which will provide cellular antennas for T-Mobile and other U.S. carriers' handsets. He also mentioned that Tesla's electric vehicles will be compatible with these connections. The rise in demand for Tesla's goods and the increase in software prices could be major drivers of the company's expansion if these initiatives are completed effectively. Similarly, a rise in Tesla's income and vehicle sales will benefit the company's stock price. Long-term investors may have concerns about their investments, but these concerns are minimal or non-existent. Rather than the short term, a company's stock performance is mostly determined by its long-term market potential. Furthermore, Tesla has dominated the global market for battery electric vehicles for the previous few years, accounting for 26% of the market. In the second quarter of this year, the EV firm reported total sales of $16.9 billion, up 41.6% over the previous year's amount. Its adjusted earnings per share also increased by 56.6%, outpacing consensus estimates by 26.9%. This indicates that the carmaker is expected to both meet and exceed pricing projections made by analysts for the upcoming years. Given that Tesla ended the most recent quarter with the greatest month-by-month vehicle production in its history, in spite of the severely declining market conditions, it is reasonable to assume that the electric vehicle manufacturer can weather any future market bumps with excellent financial results. Similarly, a number of experts and stock investors have expressed optimism about the stock. Prominent figures in the financial industry such as Cathie Wood have also disclosed optimistic forecasts for Tesla's stock price. CEO of ARK Invest, Cathie Wood, recently announced that the price of Tesla should reach $4,600 by 2026, The finance guru believes that Tesla's anticipated robotaxi could lead to a future spike in the company's stock price. More than half of Tesla's anticipated earnings, before interest, taxes, depreciation, and amortization, are projected to come from the robotaxi company, according to Wood. Furthermore, according to her, the company might be responsible for 34% of Tesla's whole sales and 62% of the company's overall enterprise value. According to Wood, given the market's volatility, Tesla shares might be worth $2,900 in a bad market and roughly $5,800 in a bull market in 2026. According to the CEO of ARK Investment, Tesla's earnings from the electric car segment will account for 57% of the company's overall earnings for that particular year. It appears that there are other stock analysts who are considering Tesla besides Cathie Wood. Several investors, including John Peterson and Kevin O'Leary, have also expressed their bullishness about the stock. Canadian businessman and entrepreneur Kevin O'Leary was a former Tesla bear, but after his son made a revelation, O'Leary disclosed that he had purchased Tesla stock and had profited by more than 1,000%. The stock investor went on to say that Tesla is a data company in addition to an automaker. Despite the fact that O'Leary's recent sale of his Tesla stock may have given rise to the impression that he is a bear on the company, the TV personality appears to have a very different motivation. He claims that he only owns a maximum of 5% of any given stock, and he sells when the stock rises above the 5% mark. This is clearly visible because, at the time, the price of Tesla's shares increased, prompting O'Leary to sell his holdings. In a similar vein, Wall Street experts predict that Tesla will generate $84 billion in total revenue and $12.46 in earnings per share. John Peterson, a Canadian clinical psychologist and author, has also recommended Tesla shares as a great investment. It's hardly shocking that these financial professionals believe highly of Tesla. The EV manufacturer has excelled its rivals in a number of areas, most notably by speeding up the production and delivery of its vehicles. Due to ongoing supply chain constraints and production problems at its Shanghai factory, the electric car company produced a record 305,407 vehicles in the first quarter of the year and delivered 310,048 to customers, despite a dip in production and deliveries from the previous quarter. Even still, Tesla managed to post a 26.5% rise in car deliveries, a record that most of its rivals would find difficult to match. In addition to the several initiatives that Tesla's CEO has disclosed, investors surmise that the company is still working on a number of other projects. The largest commercial virtual plant in Japan, Tesla's most recent virtual plant, opened recently, according to news reports. Musk claims that the business has been putting its Powerwall batteries in homes since 2021 and that there are currently more than 300 of them in place. The EV startup is also attempting to establish a virtual power plant in Texas in addition to its operational ones in California and Australia. It is important to remember that every business faces market difficulties and stock values frequently change in response to these anomalies. As a result, there will probably be a few instances in which the figures fall short of expectations. The good news is that Tesla is a solid company to keep an eye on and will undoubtedly rise again. The transition to sustainable energy and a sustainable economy, which will take several decades to accomplish, is one of the largest challenges the world has ever faced, according to Musk. Therefore, it is entirely reasonable that Tesla would face market difficulties given its goal of producing sustainable energy. Fortunately, despite these significant obstacles preventing the business from realizing its full potential in recent quarters, Tesla has still exceeded projections and achieved extremely high growth rates. Bulls in Tesla feel that the company's finest days are still ahead of it, and since many of its ideas and initiatives haven't made it to market, this is probably the case. By raising the price of some of its electric vehicles, Tesla has put mechanisms in place to lessen the impact of market obstacles like inflation. In a similar vein, the corporation plans to expand its gigafactories abroad in order to increase production. Tesla might be headed for enormous success once its main commercial obstacles are overcome.